Australian regulators have yet to decide whether they will approve Chinalco's planned $19.5 billion investment in Rio Tinto. Investors have never really embraced this deal, which was announced 4 months ago. With us today, we have Morningstar Senior Resources Analyst Mark Taylor to tell us where this mega deal is headed. Welcome, Mark.
Thanks, Vicki.
Mark, where does the Rio Chinalco deal stand at the moment?
Well, we're 2 weeks away from Foreign Investment Review Board ruling on the transaction. We've already had ACCC approval and approval from some overseas jurisdictions as well. If it gets through FIRB approval, then you've got basically a month for shareholders to decide whether they're going to vote the deal through.
And how likely does that look as we speak?
Well, the deal in its current format looks less likely to proceed than it perhaps did originally, because there's been increasing indications from particularly UK shareholders that they're not happy that Chinalco is being preferentially issued $7.2 billion of convertible notes. They're not happy that Chinalco is being preferentially treated here, and that they want to have a share of the action as well.
Is Rio listening to shareholders? It seems from the headlines that Rio is determined to do this deal at all costs.
Well, they do appear to be very persistent on this front, and there's probably two reasons for that. The first is that the management has really wedded themselves to this deal. It's a little bit about saving face, I suppose, not wanting to back down from a deal that they've really run hard with. And the other point, of course, is that while ever Chinalco is standing behind the company, it's providing support to the share price. So it's natural that they'd want to keep the idea that the deal will proceed, because it makes other options more likely for the company. If Chinalco hadn't come with the cash, then perhaps Rio's share price wouldn't be where it is today, and perhaps the possibility of an equity raising to ordinary shareholders might not have been on the table.
I believe this deal was announced about 4 months ago. Since then, commodities prices have been rising. Rio Tinto has issued, I think, about US $5 billion worth of bonds, and they've sold billions of US dollars worth of assets. Does Rio still need to do this deal with Chinalco?
It's a good question, and it's one of these things that you never really know until hindsight gives you the answer. At this particular point in time, it appears not, because they look like they've got sufficient cash, to just about cover their obligations in the near term. And if it went close to the wire, they probably wouldn't have any major issues either doing a small equity raising or selling a portion of another minor asset to get them over the line. But things change very quickly in equity markets. It wasn't very long ago that the chance of an equity raising was looking all but impossible, and companies' ability to sell assets was very limited. So at the moment it looks a lot better, and it's easy to be a bit complacent. That could change very easily, but probably they don't need to at this point in time. I'd say it's more of a precautionary move, if anything. We've
heard persistent talk that Rio plans to tap the market for cash. We've heard $8 billion, $9 billion, $10 billion of equity capital raising. How likely is this looking, Mark?
Reasonably likely to do it, I would think. It may not necessarily be that big. They're going to be having this as a plan B anyway, just in case the Chinalco deal falls over. Either Chinalco walks away, or FIRB or shareholders reject the proposal, then plan B is an equity raising. So if there's no Chinalco on the table at all, then yeah, sure, $10 billion would seem the most likely course of action, perhaps a 1 for 5 entitlement issue, or with an associated institutional raising, something like that. And even if the Chinalco deal does proceed, then given the strong shareholder desire to participate, then there could be a reasonable portion that goes to shareholders as well.
And where is BHP Billiton in all of this?
Well, BHP would dearly love to have its hands on a portion of Rio's iron ore assets, either in a joint venture or direct ownership, because the synergies would be highly desirable for the company. So they've got that interest for starters. But also important to them is whether this Rio's transaction with Chinalco is going to be deleterious to their market position in terms of what price are they going to be getting for their commodities. Is Chinalco being in Rio going to compromise their pricing power in the market generally? And so they've got numerous angles that they'd be looking at.
What is the main takeaway message for retail investors today?
I think the takeaway message is that it's looking increasingly likely that they will be called upon to participate in some sort of raising. Not compulsorily, but the offer will probably be there. So they need to be looking at their holdings, deciding whether they want to participate or can participate in that kind of an equity raising. And if they want to retain their Rio shareholding and they want to retain their relative holding, i.e. they don't want to be diluted by a lower priced issue, then they might look at perhaps selling a few shares in the lead up to this so that they've got some cash to exercise those cheaper entitlements if it occurs. But of course there's no guarantees in any of this. It's not over till it's over.
Thank you for your time today.
Thanks.